If you're going to be buying a home soon and want to make sure to get the best interest rate on the mortgage you take out, this video is for you. I'm going to talk about some important features of what credit scoring is, share some hacks to ensure you get the best rate, along with a $275,000 tip and a video at the end that might help you prevent drama when you go to buy a home. Hey, Ray Williams, Mortgage Maestro Group. I'm going to skim across the top of this, but why is credit important? It helps lenders determine how risky we are. Okay. So there are the three bureaus, Equifax, TransUnion, Experian, millions of data points to tell them how we may act when we borrow money. Our credit is reported in 5 features. It's going to be the amount owed, going to be payment history, going to be the types of credit, it's going to be the new credit, it's going to be the credit history. Please know this. Your credit score alone doesn't mean you automatically are approved for a loan. There are a lot of other variables that impact a mortgage approval. Give you 3 tips on how to hack your credit score because credit scores impact our auto loans, our insurance, and other things that we have to finance, including credit card offers we may get. So if you want to travel for free and get points, you need higher credit scores. Keep the balance under 10%. Number 2, how you can do that? Make payments more than once a month. Pay it every week, pay it every 2 weeks. Don't go too high. Over 30%, you're going to start to see diminishing returns on that balance to limit ratio that I talked about with those credit cards. And then build depth, build time. The longer you have that credit card, the better it will help your score. And you can absorb if your balances had to run high for a hot minute. Let's talk about the importance of good credit in buying a house. Going to use a real example of a home, $500,000, 5% down, the difference of a 680 credit score and a 760 credit score, and how this may affect your life. 2 things to understand: it'll affect your interest rate and it'll affect your mortgage insurance. I'm talking about conventional loans. You see here that the half a point difference in interest rate and the mortgage insurance actually has an impact of $325 a month to the payment. Now, could it be possible that person takes the money and sends it back to the loan as additional principal every month to make the same payment as the person with the lower credit score? If that happened, they would pay off the house in 23 years and save over $158,000 in interest. Past that, if they just took the money and started a low risk investment account, let's say they could average over 30 years, 5% return on that money. There's your $275,000 tip, because that's how much that $327 a month would accumulate to longer term. It does affect your net worth, guys. Credit score matters. I'm going to give you that last tip. It's a special tip. A lender can do what's called a forced rescore by manipulating the credit bureaus with your information and forcing them to report the lower balances to get the better interest rate at that time. I also mentioned I was going to share that video. I would say it's worth 3 minutes of your time if you're going to buy a house so that you can prevent hundreds of phone calls, because those 3 bureaus I talked about in the beginning, they sell everyone's data, mine, yours, everybody's. I hope you found value in this. If so, please subscribe, because we are going to build from this series on the home buying journey along the way towards your successful closing on the house. Take care.